Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. But before we talk about our income pick, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could go directly to www.incomeinvestors.com or click the link in the description. While you're at the website, you could also sign up for some free reports that we offer to our readers, and they get delivered to your inbox. Fears of potential recession in 2023 hit crude oil prices earlier this year, with West Texas Intermediate hitting a low of $63.57 per barrel in April. But thanks to record demand and consumption, production cuts from OPEC, and fears of recession waning, crude oil has been surging higher and recently hit more than $88 per barrel. This bullish sentiment has been helping send Petrobras, traded on New York Stock Exchange under symbol PBR, significantly higher. It also helps juice its ultra-high dividend. John?
Yeah, thanks, Mo. Petrobras is a state-run multinational company that specializes in the oil, natural gas, and broader energy industry. The Rio de Janeiro-based company is engaged in prospecting, drilling, refining, processing, trading, and transporting oil from producing onshore and offshore oil fields and from shale and other rocks. It is a proved reserve of 9.8 billion barrels of oil equivalent, and every day it churns out 2.7 million barrels of oil equivalent. Of that, 1.8 million barrels is crude oil. Now, with the decline of the internal combustion engine and expected pullback in oil demand, Petrobras is actually taking steps to decarbonize its operations. This includes owning 3 biodiesel plants, 15 thermoelectric plants, and 1 photovoltaic solar plant. Now, why is it doing this? Well, it has to do this because the growing number of countries, 128 at last count, are working towards net zero by 2050. Those countries are responsible for 88% of global emissions and 92% of the world's gross domestic product. On top of that, 43 of the world's leading international banks made limit capital available for the oil and gas industry due to stricter goals.
Let's talk about numbers. How did this company do in the last quarter?
Mixed, but expected. Second quarter revenue was $22.9 billion, which was down from $34.9 billion in the same period last year. Gross profit came in at $11.6 billion versus $19.4 billion in the second quarter of 2022. Consolidated net income was $5.8 billion compared to $11 billion a year earlier. Earnings per share were 85 cents per share, though, which was 10 cents better than analysts were expecting. Now, recurring net income, which strips out one-time items, came in at $5.8 billion, which is, again, down from the $9.1 billion a year earlier. Cash flow from operations remains strong at $9.6 billion. Meanwhile, year-to-date cash flow was $14.6 billion. The company's refining utilization rate was 93%. The highest level since the third quarter of 2015, with diesel, gasoline, and jet fuel production representing 67% of that total. It also reported a sales record for diesel and the highest year-to-date gasoline sales in 6 years.
John, I have to ask, why is energy giant like Petrobras reporting lower earnings?
Well, yeah, it's a good question. Oil prices are robust, but they aren't as robust as they were a year earlier. Petrobras is performing similar to its peers, actually, who are also reporting a big drop in second quarter profits. Global oil prices were down in the quarter from a year ago as a regional banking crisis in the U.S. and fears of a possible recession raised concerns around demand. It's been a different story in the third quarter, though, with global oil demand hitting a record of 103 million barrels per day in June, and August numbers are set to be even higher.
Also reading that this company changed its dividend policy. Could you explain a little bit further?
Yeah, it did, and it's a little bit complicated, but in the end, I think it's better for shareholders. Petrobras announced a new dividend policy, one that cuts its payment to 45% of free cash flow, but allows for share buybacks. Before the reduction, it's just distributed as much as 60% of its operational cash flow. Now, the company will continue to pay a minimum dividend of $4 billion a year, as long as Brent oil prices remain above $40 per barrel. And right now, Brent crude is trading at $90 per barrel. The new dividend policy will see the company pay dividends in line with those of its peers. It also means that investors will be able to rely on a more predictable payout as opposed to payouts that fluctuate drastically from quarter to quarter.
And I was also reading that the higher prices and asset sales allowed the company to provide exceptionally frothy quarterly payout. In 2022, Petrobras paid more dividends than any oil company aside from Saudi Aramco.
Yes, and as a state-run company, Petrobras was criticized by Brazil's new president for spending way too much on dividends while neglecting to spend more on refining and the energy transition. He said Petrobras should have invested half of its annual dividends in Brazil's economic growth. Now, to help the company, The markets were afraid that the new leftist government in Brazil would go on a spending spree, hurting the company's balance sheet. But the company's new CEO recently unveiled a new 5-year business plan that will see it maintain a similar capital expenditure program, which was in line with the last CEO's mandate. And of course, Wall Street was happy with this. To that end, Petrobras announced a third quarter dividend of 23.5 cents per share, or $3.67 on an annual basis, for a current yield of 25.01%. Now, admittedly, that payout is 39% less than the 0.381 paid out in the second quarter, but it's higher than what investors thought they might get under the new management and dividend policy.
And let's also talk about Petrobras stock. It's at record levels.
Yeah, oil prices have been volatile over the last few years, with Brent and West Texas Intermediate tumbling during the pandemic and experiencing periods of volatility while it recovers. Petrobras stock, on the other hand, has been moving steadily higher since the broader markets bottomed in March 2020. Petrobras stock has also moved significantly higher since the company unveiled its new dividend policy and capital expenditure program. As of this recording, Petrobras stock is up 11% over the last month alone, more than 15% over the last 3 months, 54% over the last 6 months, 57% year to date, and 36.5% year over year.
John, thank you so much for your analysis. Just to recap, Petrobras is an oil and gas giant with a strong balance sheet, reliable cash flow, and improved dividend policy. The distribution will not be as massive as they were in 2022, but the payouts will be more reliable, sustainable, and in keeping with the big dividends its peers are paying. That said, any surplus cash could be used to pay a special dividend, which management will look at closer to the end of the year. Dividend hogs may wince at the idea of company lowering its dividend distribution, but Wall Street is on board, sending the dividend stock to the highest level since 2011. That's it for today. We'll be back with another income pick soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.